Today I'm going to show you a trading strategy that is so powerful that in my 25 years of trading, almost every single $1 million trader that I have ever met is using this strategy or a hybrid version of it. And the reason they do so is because, to put it simply, it just works. And it works because it taps into the one force that has been driving markets since the beginning of time. And that is human emotion. Now, the strategy I'm going to share with you today is one that was taught to me back in 2005 by an institutional trader, and it completely rewired my brain. It was like my version of taking the red pill in the Matrix, because from that moment on, every trade that I took became crystal clear. And once you learn this strategy, you will be able to approach the market with the exact same clarity. Because this strategy will cut through the noise of standard technical analysis and the fluff of pretentious market theories and expose the raw emotional undercurrent that moves markets on a day-to-day basis. And once you've learned this strategy, you will now have the ultimate edge, understanding exactly who is on the other side of your trades and whether or not it is smart money or whether it's dumb money. And from that moment on, you will approach every single trading session laser focused, unshaken, and armed with the confidence that you are now playing this game to win. So in today's video, I will show you everything that I have ever learned about this strategy, and I will do it in a real-time trading environment. That way you can see its power and you can start using it immediately. And if you follow the step-by-step blueprint that I lay out for you today, by the time this video is over, you should see an instant improvement in your trading results. So my friends, it is with great honor and excitement that I have this opportunity today to share with you this trading strategy. And like I had said there in the introduction, this was something that was taught to me back in 2005 by an institutional insider. And throughout my 25-year journey as a trader, I would say that from the 7-figure retail traders that I have met that are consistently earning 6, 7, some even 8 figures are in fact using this strategy or a hybrid version of it. So I know without a doubt it will work for you. Plus, I've been religiously using this since 2005. I know what it's done for me. And once I lay out the details, the blueprint, and the steps, which really aren't that hard to follow, you should have no problem at least moving much further along with your trading journey. It may not make you a millionaire, right? But it'll at least put you on the path that you can think about things like 6 figures and 7 figures instead of just kind of being the hamster on the wheel and getting smacked around all day. And the reason I can say this with confidence, and the reason I wanted to do this video, is because the power of this strategy lies in something that just simply will never ever leave the market. And you probably heard me say this before, said it in the intro, and that is emotion. Emotions are a huge part of what it is that takes place on a single day in a market. And no matter what you do, no matter what's been said, there's just some people out there that cannot stop themselves from chasing stocks or other assets or making critical mental errors. And look, I'm not casting judgment anywhere. I spent a good 5 to 6 years in the beginning of my trading career getting smacked in the face and barbecued alive because I just simply couldn't keep my fingers off of the mouse. I kept acting with emotion. And the reason you're going to make money on this is because you are going to exploit that other side. You are going to exploit that trader who simply cannot stop themselves. Now, that may sound very cruel to you, but allow me to be honest with you and as direct as possible, because I'm assuming you want to make a lot of money. Trading is a grown-up person's sport. It's for big boys and big girls who want to make some money. And if you want to make some money, you have to be able to take advantage of situations. In all intents and purposes, trading is a zero-sum game. If you make money, someone's most likely losing it. And if you're going to participate in it, let's make sure that you are not the one losing. Okay? I think we're all on the same page there. Also, we have to understand too, I should say this, is that the only way we can ever really truly think about 6 figures and 7 figures, since I'm on the honesty wagon here, tough love, call it whatever you want, is you truly have to believe, like I'm talking deep in the gut somewhere, right? every fiber of your being, that the strategies you're using, that the theories you're subscribing to, that the people you're following are going to be the things that take you to that next level. If not, you need to look in the mirror and make some changes. That's what you got to do. But at some point, the only way you're going to get rich at this is you're going to have to take both hands, trade her up, step in there. Never going to do that if you're not confident, okay? I'm going to try to make you confident right now. So on the screen here, the trades I'm going to talk to you about today, they accomplish the same thing, go by two different names. There's two different variations of the trade. One is the para. That's short for parabolic. Many of you may have heard that. It's not a new word in market terminology. Maybe you have no idea what it is. Maybe you're trading some form of it, especially you penny stock traders out there. And of course, the ramp. And I'll show you exactly what these look like. Of course, the concept, as I had said, takes advantage of emotions and lets you know, more importantly, who is on the other side of your trade. Maybe you've never asked yourself, like, who's on that other side? Who is that person I'm competing against, right? Think about it. That's what's going to make your technicals work, because we want to be on the side with big boys and girls, where that big money is, smart money if you want to call it. We don't want to be doing what retail's doing. It's going to get us in a lot of trouble. And the theory behind this, it is a reversal trading strategy. And it doesn't mean contrarian, where we're just, going against the greatest of all trends. It's not a trend. There's a pocket here of emotion. But if you ever look at any chart, which I will show you, it's clear as day, that every huge rally has always begun from a terrible sell-off, right? The biggest sell-offs lead to the biggest rallies leads to be the sell-off. The bigger, the better, the more extreme, the more we know who's on the other side. So first up here, let's take a look at what a parabolic chart may look like. And on your charts, it could be something generally that starts out with an impulsive move. And you'll see, again, markets tend to move in sequences and impulses. They contract a little, they think a little, consolidate, whatever you want to call it, and then they'll impulse again. I've gone through this with the measured move video recently. Same thing here. And let's say it may flag. Those who follow the channel remember the box theory, right? It may stay bounced in a range, and then it'll quickly get very, very aggressive. Just literally go straight up. That's all I want you to think about right now. Impulsiveness, that is straight up. Green candle, green candle, green candle, green candle. If it's going to the downside, same thing. It'll begin with an initial burst lower, consolidate, then a really, really aggressive move to the downside. Okay. So let's just think aggression, impulse, all right? Extended impulses for now. And then we'll move to the ramp here. Again, I'll show you these in a lot more detail here in just 1 second. Ramp is similar to this, but it starts out a little bit slower on its break. It'll come maybe from the same type of box or consolidation. It'll begin in a very slow movement. And then all of a sudden, it'll start to really, really pound on the pressure and start to get accelerated. Same thing, reverse to the downside. You begin with a move, you consolidate, you slowly start to trickle down, and then you impulsively waterfall, okay? So with both of these, you saw enormous extensions. One's straight up, one's a little bit more ramped, like a freestyle Moto X ramp, right? That's what it's all about. So right there is what a pattern may look like. Now, let me dissect this a little bit for you so we all understand, why is something like this going to work? What are you talking about? Put it all together, make me some money. That's what I'm going to do here. Let's first talk about the parabolic. So many times the parabolic will come from a certain, again, the first impulse, maybe it comes from a flag, it comes from a pullback. There's generally some form of sideways action or a pullback that begins this. Many of you may see a drawing like this and think of the flag. That's a very popular pattern. But here's what you need to know, because again, everything is in context, and it comes with a complete understanding of what's happening. There's a confluence that's going on here that many of you may not know about. So once this is pulled back, what we can't see, but what we have to trust that we know via our technicals, remember, we have to trust that we know this, is that we could guess that rookie traders would be probably here in terms of a stop loss, right? If they were short, rookie shorts, newbie shorts, they're probably going to be stopping out there. Now, there might be some pros up there scalping, and maybe it was really parabolic at this movement. I don't want to say that, 100% of these are not shorts, but let's just say hypothetical in this case. We know that there is a series of stop losses leaning over here. We would also know that if this is to quote unquote breakout, and I only use air quotes because breakout and breakdown are probably two of the most misused words in existence, but let's go ahead and use them now. I'll explain later. We also know that once this gets going, there's probably a lot of orders laying right here for those that like to take breakouts. Now, here's what I want to highlight at this moment. If you were to put a stop here or you were to buy here, what kind of trader would do that? So if it was a pro, a seven-figure trader, a whale, are they buying here? Now, I might have said this before, but I can tell you one thing. Hedge funds, high-frequency trading firms, institutions would rather than chase anything. They don't buy anything at high of day, and they don't sell anything at low of day. They just don't do that. So I would say, your whale's probably going to be down here. This is my best version of a very fat whale. Your big, wealthy, fat retailer that knows what they're doing, they're going to be here. They're not floating around up here. Now, the thing we have to understand about this move, how it actually starts, is when this person gets stopped out, that short sell that converts to a stop out becomes a buy, and that hits the market as a long, as a buy order. While at the same simultaneous moment, this newbie trader, this group of retail newbies or chasers, are also buying at the same exact place. This is one of the reasons why breakout trading doesn't really work for most people, because number one, they don't understand what a breakout is. And number two, it's used for the most famous word. It creates liquidity for the whale and the big trader to get out, which we'll talk about. And this is when you'll see often these very large, aggressive impulses. Now, often from here, what will happen is it won't even make it that far. It'll instantly come back down. You may have heard something like the breakout retest strategy. That's why a breakout retest strategy is used, because you're going to come back and fill the remaining orders. But let's focus on what we are talking about. Sometimes the market will defy all of the odds, and this thing really starts to get aggressive. And the further that you start moving, you're realizing there is no pros buying this unless they're on some really tight, specific scalping strategy, and that's pushing it. We know for sure who's doing this. It's retail. So we got to put these, imagine the next time you take a trade, what kind of person sitting up here, okay? Now they're all chasing this. Now, obviously, most of you watching this, I know you're smart enough to realize you don't buy this. But look, we're all smart enough to do something, but sometimes, right, we have those emotional moments. We have to make sure we don't do that. But here's another level to this. Somehow, at some point, this now creates, again, that famous word, liquidity. It creates a surge of volume that allows the bigger orders that were placed by the seven-figure retailers, and definitely the whales, to start slicing out of this position. And usually when it peaks out and it starts to move back, there's something here that takes place. There's something right here that turns this whole thing, this whole theory, into one big chunk of gold for you. And that is, once this starts pulling back, what does the chaser do? I mean, they're just looking at the P&L. They pushed a button. You ever done that? You pushed a button, then you're looking, oh my God, oh my God, oh my God, I'm losing money, right? You done that. I've done that before. I know what that feels like. Makes you feel a little bit dumb because you got caught in the trap. That's the point. You got caught in the trap. So once this come back, They got to panic out. If they panic out, what are they doing, guys? Selling. They start selling. So you got all of the flow from Mr. Whale, Mrs. Whale maybe. You got all the flow from Mr. and Mrs. Retail Trader. You got the chasers up here. All of that volume hits the market at one time in rapid succession. You get what we call as the A-frame, because these people are going to panic. That's what they do. They panic buy, they panic sell. You think whales panic? No. Pro traders panic? No. Rookies panic. And you know when that's chased, it was panic buying. Panic buyers lose. Now, that doesn't mean later on this thing won't rally or it's not a good investment. We're not talking about investments. We're talking about making trades. So whatever you're doing, the key is you don't want to chase. And one way to do this, if I haven't mentioned it, is when something starts in terms of candles, like I showed with both the ramp, right? The dead giveaway is the candle should never get bigger at the end. As the cycle of that pattern starts to extend itself, you got some trouble. So also for those who've been around, watched the channel, you've seen me talk about measured moves. That would make those measured moves sound, better. And the same way with the ramp, as you're beginning the sequence, at one time it was a pretty good breakout trade or flag pattern trade. And the same thing applies. It just starts to get too much momentum and it starts to extend itself. Now, I'm sure we could dig deep enough in certain situations and we can find ones that defy it. The market's always going to have that 10% of who knew, right? Wow, right? And sometimes you might pull a few of these off in a bull market, or you might pull a few of the shorts off in a bear market. But what I always want to teach with these videos is it's not what we do once, it's our entire body of work. And you're just begging to be punished if you chase these. And that's why the strategy works, because it takes advantage of that pocket where, whether it's on a 1 minute, 5 minute, 1 hour, 15 minute, 30 minute, a daily, everything will get at some point so unattractive to the big boys and girls. They're going to pull out. They got to take these profits. And probably what I should do, it would be more of an lecture, but you guys tell me what you want to think. Sorry to switch topic here real quick, but something entered my mind. I thought it was pretty important. I should probably do an entire video about how hedge funds buy. That'd probably make a lot of sense for anything that you're trading. If it's something you want to know, #fund, put it down in the comment section. If there's enough response, I'll do that video next. But back to this. That's why something like this would work. Now, one last thing that we want to do, let's go back to something typically like a parabolic. I want to make something very clear before we start. Because, the old saying, the market can remain irrational longer than you can remain solvent. We have to keep in mind something very, very important. You just can't run into this because it's that way. Okay. We still need a signal up here, which I'm going to show you. We still need something up here to tell us that these people are in fact selling. What if they don't, right? What if it keeps on going for another day or so? It's not like we haven't seen things do that. So we still have to be careful. What I have to have here are two pieces of context for me. Like I mentioned, context. One is this has to be at a resistance, or if it is down below and I'm doing it the other way, buying the dip, it has to be at support. It has to be a viable, deep level, overextended move that tags a past buying area that represented aggression. May sound like a fancy sentence, but I promise I'm going to go over that again with you. Also, I must see a candlestick signal. Some of you may remember the John Wick. Two of my favorite. One is the John Wick, which is the extended wick. And something I've never done yet is the Power of Tower. Guess that could be a video here for the future. But they both represent the same thing, which is it hits a specific area and there's extreme rejection. Some of you guys make basketball. Remember Dikembe Mutombo? He would come up there and smack those rebounds and then wave his finger. It's got to be Dikembe Mutombo kind of rejection, like really badass rejection. And usually what I'll do is, like I've mentioned in the John Wick strategy, if you have a candle, right, I want about 50% of that candle right? So if it's a really huge candle, somewhere about 50% to 30%. I want to go right in if it's the next red bar with stops a little bit higher, or you will see that in the form of a wick where it had sold off aggressively and the candle couldn't even finish. The point is, it's not just rejection, it's significant rejection. So think about what we have here so I don't lose everyone. There's three components here. The impulse gives us the signal, whether it's a ramp or it's a para. The impulse gives us the signal that we have rookie chasers that can't control themselves. Heck, it may even be some pros just wanting to have some fun, but I don't know. But we know we've got an emotional event, and emotional events don't last for very long. So we know that's going to come to an end. We want to then look at the next area of resistance or support if we're going to do the reversal buy. And we want to prepare ourselves that if we can trend into this area, liquidity, right? You trade into that. We want to look for the next signal, which is the candle that will tell us there's that buyer, there's that seller. Again, we need the candle because remember, we can't see those orders. All we have at our disposal is technical analysis. That's why we need it. Impulse, emotion, resistance or support, candlestick. So let's go ahead and move over to some real live charts and see how this works.
All right, time for some live trades to see what this thing can do in a real-time environment. Plus, we got to pay some bills, right, guys? So I think we have our candidate here already, which is the NASDAQ future, the NQ. Now, just take a look at this chart before I start explaining it. I want you to tell me what it is you see based off of what we discussed in the whiteboard. Now, for some of you that have followed this channel for a while, you're going to see a couple of other lessons here, and I'm going to share those with everybody real quick. And I'm going to give you a little bit extra context that will go into a possible trade here, as long as it doesn't get silly here in the pre-market. And there's something I also failed to mention, which is another little secret when it comes to a trap. Let's just take a look at this pattern here. And I would say you kind of have, let's go from this spot right here, 20,600 to where we are right now, 26,842. So you kind of have both a combination of a ramp and a parabolic. So take a look at what we have here. Well, that was the bottom chart. Let's open that up. So take a look at what we have. We start out here. We have that nice little consolidation, that nice little structure trade, right? And as soon as it busts through that level, guys, remember who follow this channel? The box theory, right? You bust that range, you do what? You get very, very aggressive. See that? A very, very aggressive 1, 2, 3, 4. This is a 5-minute chart, by the way. I need to make sure you understand. It's a 5-minute chart. It doesn't matter if it's a 1, 5, an hour. It makes no difference. Theory's the same. You got a little bit of aggression here. But what happens right after the aggression is actually a tiny bit of a pullback, almost kind of like a breakout retest. But then it gears back up, does it again. So you got a second wave, like this thing is going to do the double right here. But take a look at those candles, right? Now again, who's up here, guys? Who's up here? Like what are we doing? Like where do you think the pros are when they're making their trades? You think there's algorithms, institutions? Who's buying that? I mean, we know who's buying that in most cases. The pros are already in here. They're just trailing up stops, right? So this is probably going to get pulled back somewhere into here or into here. Now, there's another trick right here I wanted to show everybody, and that's the daily chart below. The reason this is also happening, a little secret here, is look, it's breaking out on the daily. Let me open that up. So what's happening is a lot of these traders are probably waking up. Look at that. You're just right there at the resistance point, okay? And you're getting ready to wake up. They're waking up like, oh man, I don't want to miss this rally. They see that rising support. Like, oh my goodness. Now there's a couple of other lessons here. So I'm going to say this is probably a trap. Let's hope it doesn't sell off here in the pre-market, because what can happen is when this market opens, we might be able to catch a couple of chasers. I want to show you a couple other quick lessons here. One is something we speak about a lot, or the video that I had done recently. Again, I'll put those links up here on the channel. And one of those is the measured move. Take a look at even this move here. Look at this move right here, 20,385. You see it right here? This is a 5-minute chart again, guys, right? it goes from here to here, pretty much unstoppable, right? So you go from 20,000, let's say 20,400, right? 2,400, sorry for this crappy penmanship here with a mouse, to about 20,750, right? So you got 350 points here in succession. Now up here, you look, it's just simple math, 20,008, right? 800 to 20,000, almost 500, right? So you got another 300 point directional move. Now we come over here, we have 20,600 and we have 842. So we have 250. So you're already beginning to extend yourself based off of your range. I mean, you just think of what we're saying. It's pre-market. You haven't opened up. You've gone straight up 250-ish points. You're above the resistance. I mean, it couldn't be any more of a trap. So the only issue we may have is we are pre-market, and I hope it doesn't sell off because I think the volume is light enough it may stay up here in this range. But let's go towards the open. Let's see if we can get one more pop up in here and try to get a short. And what we're going to look for is a good piece of that move to come back and either visit this 20,750 or even the big liquidity zone right down in here, 20,006. I mean, that's a pretty good, that's a pretty good setup. And again, take a look at what you see there on the charts. This big sell-off, look how that accelerates right there. And what happens? Leads to a big rally. Big sell-off leads to a rally. Sell-off leads to the rally. That's how it always does. So let's go ahead and wait till the market open. Come back, take a look. Okay, so now the market is open, and look, this is exactly what I thought we were going to get. I mean, I've been around a long time. I kind of felt like as soon as that market opened, we would get a last round of chasers. Nobody wants to miss. So what we're going to look for here is a little bit of, like take a look at that wick. We got to get in this. See the wick? See the wick? See the wick? Right there. You got your pull. You got your pull. I think that's going to be it. Let me just grab one here, right? All right. So we are in 20,872. Yes. So stop would be a little bit above 2,900. It's first thing in the morning. It can get a little bouncy, but let's target here. I'm going to put this right here. All right. And any one of these levels I think would be a pretty good trade. And I'll tell you what, if it was good enough and it gets aggressive enough to the downside and matches a measured move like this, because remember, we're going to see these people get trapped out here, right? We're going to see them probably, those late spooners going to get cheesed up here. There it was right there. I mean, take a look at that. Let me see if I can open that up just a little bit bigger for you. Look at that. I mean, that's John Wickey right there. You see the retracement? That is the big seller showing their hand. And there's an awful lot of aggression there. So that should continue to push a little bit lower down into those areas. Open that back up. Let's see that. So let's stop these people out. And what I was saying is maybe if it gets really aggressive, I would actually look at these areas down here to reverse and move back up there. So this could turn out to be a pretty good one. Let's just keep, there it goes. Look at that. There we go. So that's pretty good right there. I think we can get this 20,750. So again, just look at the pattern. See the panic now, the panic selling, and it's not bearish. This is not the daily chart. It's not bearish. This is just a trick. It's just a trap to create liquidity, to get people to sell, and down it's. Oh, this is nice. That's just the way you want to start your day, right? Just the way you want to start your day. Oh my. And look, and it wasn't. That's not stressful. It's just something that was laid out. Oh, this is really good. This one may go all the way down. I like this one. Okay, checking back with this. Perfect. This is perfect. So I think somewhere in here, this was actually the breakout coming from that box. Again, that liquidity. I'm just going to cover that thing up right there. And actually, I think I'm going to look to buy because the same principle now would be in reverse. Let's not forget that. That's the beauty of it. So maybe you missed the short. Let's take that. It's almost 2,700. Anyway, let me just talk for a second. If you miss the short, you can now go for the long. It's the same thing in reverse. Because what's going to happen here, if you think of the other side, now that they're out, they're going to want to buy back. The funds, the institutions, the pros are going to be looking to buy this dip. That's why I don't want to hold the short. It's not a market crash. It's just this is how it works. Hopefully you see it like there is a trap there, and we don't want to get caught in that. So if you did want to buy, now's the time to start looking at either buying there, or I tell you what, if you could get it down in here, these would actually be buy areas. We could double dip this. Oh, this is awesome. We could just double dip this bad boy. What a beauty. What a beauty. Perfect setup. Everything on that was really nice. Let's go ahead and grab. Let's see, we did it even. There we go. Let's just say it. All right, there we go. There we go. Very, very nice play. And I'll tell you what, let's see if maybe there's a reversal. All right, guys. Well, I fast forwarded it here a little bit. I did not take the long trade, but I wanted to show it to you because it gave you the same setup, but on the opposite side. That's why you should just never think about one side. Oh, I'm only going to long. No, you should short too. You should short and you should long. But take a look at what happened. There was the panic, and look, it just went actually all the way back down into this pocket. And if you're sharp enough, that's 20,630 to 20,000. That's like 100 points. And look where you went. You went right back into this. But look, you can't chase these greens. Hopefully you see these other lessons, the box theory, the liquidity zones. I mean, you see that these things, just keep it like this. These assets have a tendency to trade from one level to the other. So in order for us to actually break this high of 20,900 and start running to 21, we've got to pick up these orders down here. We have to test it. Again, it doesn't mean that we're bearish. It's just a pocket where everything got a tad bit out of control, and that emotion will never leave the market. And if you learn anything today, whatever you do, don't chase this stuff. You're gonna get hurt. But hopefully you see that, and it'll work with anything. Just remember that process of getting that emotion out of those trades. Well, what a beauty this one is. They don't always turn out to be awesome trades, but if you continue to do that process, you should be nailing probably 80% of these. Might actually give you another look if you get another double dipper here, just another piece of confirmation, and this buyer shows back up. This would be a little bit different trade, but there's your big buyer. There's your big seller. Now you have an extended box. And remember, what we don't want to do, don't diddle in the middle. And the reason you don't want to diddle in the middle is risk and players. There's no big whales in here. Your biggie whale up here, biggie whale down here. You want to buy down here. You want to sell up here. So maybe, look at this candle, might dip down in there and give you another one. Probably even, you'll know it because it'll bounce. See those two wicks right there? There's two wicks right there. Let's see what we got here. See those? Right there. Curious to see if this bad boy comes in here and starts getting picked up. You can even see the hesitation there. You see that little hesitation on that candle? It doesn't want to follow through. You see how that wick is developing? Look at that. See that? See that right there? See it? 1, 2, 3. Whales showing their hand right there. Right? Take a look at that. That's probably the low of day right there. But anyway, hope that was at least beneficial to you to some degree.
So my good friends, that's going to do it for today's video. I hope you found some value in this. And as always, if there's something I left out, which I often do when I rant, I want you to just put it down there in the comments section or reach out to me via email, and I'll be glad to get back to you as soon as I can. And I just want to make just one thing clear in case this is the last time you ever watch one of these videos. I'm going to do something else. Just remember that this whole trading thing is a process. It takes more than just a technical pattern. And if you want to be a 6- and 7-figure trader, they're not born. We're made. We have to study. We have to work. We have to continue to try to find ways to become successful. And technical analysis is just one tiny piece of a puzzle. That's why there's not a holy grail. Once you can take all of this context and all of these other factors in, you're going to have that confidence because at the end of the day, that's all a trader has is their belief in their system. And sometimes you're going to get pushed around. And that's when you're going to need to know it the most. Okay? Just want to make sure everybody got that. Now, before I sign off, let me just do one last little chat here. Starting at the first of the year, I'm going to be doing these educational videos in depth, more like courses. They're totally free. I'm going to be doing like backups, like answering questions through it, more about the box theory, the John Wick, the power towers, more about this stuff. I'm not going to post them on YouTube. I'm just going to send them to the email list that we have because they're long. It'll mess up the algo and all that kind of good stuff. So anyway, I just wanted to say that. Subscribe to the list. We do a watch list every week. Videos coming after the first of the year. Got a lot of other good things coming up here. More educational content. Just been busy here recently with a vacation. I just wanted everybody to know that. But enough is enough. I just want to thank you for your participation today, for listening to this. As always, if you have questions, reach out to me. Until next time, take care, trade well. See you soon. Cheers.